Hello everyone, Will Hassel here once again for my edition of my watch list for the week ahead. Starting off with the week in review, we have all here charts for the major indices, the Dow, S&P, NASDAQ, and the Russell 2000 index, this is just letting you know, I am watching this index, a lot of people are, because it has been lagging the major indices. As of lately, people are saying this may show the early signs of a turnaround in the stock market, meaning we're going to go down, this, that, and the other. I'm just watching it, making sure, it's going to go up. Thinking about putting some capital to work in because of my out position in Fannie Mae. We'll get to that later. But overall, you can see that the major indexes, pretty flat week up until Wednesday, where we closed off sharply down on pretty much all of them, then were boosted up. This was promptly by the Fed minutes. The Fed released minutes that we could see tapering here in the next couple, and then in the coming months was the quotation there. And I said that they are going to taper most likely bond purchases in the terms of the $85 billion that are a mixture of bond and mortgage-backed securities. And Bernanke also came out and then said, you know what, the low interest rates that we have are probably going to continue even after we have tapered the bond purchases. So we will get low interest rates for quite a while. And then the next day we had very good economic data, and that pretty much cleared those losses right off really quickly. I think people realized, first it was all in the taper trade, we're going to stop getting all this easy money, look what's going to happen, we're all scared, we don't know what's going to happen, there's going to be a huge sell-off. Sorry, that was my phone, I'll turn that to silent. There's going to be a huge sell-off. People are going to start panicking, what do we do when QE runs out? And then I think people realized, the Fed is going to stop QE because we are better off than we were. Look at the economic data. The economic data is improving. That's why the Fed is tapering. Things are not as bad as they were. And I think that's what people realized, and that's why the markets went up. Janet Yellen was officially approved by the Senate Banking Committee to become the next Federal Reserve President. I don't think anyone really thought that she wasn't, although the vote was 14-8, if I remember right. And when I saw that vote, I went, wow, that's a lot more nays than I thought Janet Yellen would get. So as we just see, just going to zoom in for you guys, just that dip. All the major indices closed below their 200 and 50-day moving averages. The S&P and Dow Jones closing above those 1,600 levels for the 16,000 levels. For the Dow Jones, the 1,600 level for the S&P. NASDAQ, QQQ. Sorry, this does not read the exact thing. Closed above its 50-day moving average just slightly, and then the Russell closing above its 50-day moving average once again. We are all looking for the NASDAQ to make that new high of 4,000. It closed Friday at 3,991. So looking for that 4,000 mark to break its all-time high. For the week ahead, we have a slew of economic data. Now, just to remind you, this week is Thanksgiving week. So the markets will be closed on Thursday, and we will have a short trading session on Friday, meaning the markets are going to close at 1 o'clock. For Tuesday, our economic data numbers are the September housing starts. The consensus estimate on that is 900,000. Last period was 891,000, and that's going to be at 8:30 on Tuesday. Again, on 8:30, we have October housing starts because we had that whole government shutdown, so that housing data is delayed. So that's going to be we're looking for, both of these are actually tapered off of. So the consensus estimate is 9,900 and 18,000 for that one. So you can look for a big improvement. That's what the estimate is. There's no not any for the last period. So it looks like the markets are expecting September to be good in terms of a beat, and then we are expecting a slightly larger, so just an upwards of 18,000 home starts for then the October number. And then finally at 10 o'clock, we have the November Consumer Confidence Index report, and that last period was 71.2, and the consensus estimate this time is 73. So they are expecting a big jump in the consumer's confidence, meaning they would think people are going to keep buying things more. Sorry, just checking on my time. They're expecting people to come in thinking they're going to buy a whole lot more. The economy's better because we've got Black Friday and the whole holiday season kicking off here in a couple days for Black Friday and all that. On Wednesday, I put a star next to this because we have the November Michigan Sentiment Index at 9:55. This is all Eastern time, by the way. And that's the consensus estimate is 73.1, and the last period was 72.0. The October durable goods. Now this is an interesting thing right here because the last period we had a gain of 3.8%. It looks like the consensus estimate is going to be negative 2.0%. So they are looking for a big drop in durable goods. And then at 10 o'clock, the October durable goods is at 8:30. At 10 o'clock, we have October leading indicators. In the last period, we had a gain of 0.7%. And they're looking for a consensus estimate of 0.1%. And then finally, on Friday, what I think is going to be the most interesting economic data that we were going to have this week is the now infamous Chicago PMI number. I say infamous because last period we had a huge beat at 65.9. I remember listening to CNBC and looking at the markets as this happened, and I remember and then I looked on Twitter and it said, the whisper number is 65, and I went, whoa. That's because, normally the expectations are around the 61, 62 number, and I remember hearing 65, that cannot be right. And then Rick Santelli came on and said, Chicago PMI data is 65.9. He said, wow, I'm not sure even if this is right or not, because it was such a huge beat. And the consensus this time is 61.0, and it's going to seem like a big gap down, but it really isn't because, we had such an amazingly huge beat the last time. So we can only go down a little bit more than that. I think it was the best Chicago PMI number since the 80s, if I remember right. That's your week ahead for the economic data. What I want to go and catch you guys up to is on one of my stock suggestions, and that is Nordstrom's. Loading here, as we can see, ended lower on this week. If I go back to the 10-day, so that's a 2-week chart. Ever since they had that bad earnings, it just kind of slid down. I still think that this is a buy here. You saw this little pop because we had good retail sales numbers, so it had a nice little drive upwards from that 61.98 to all the way up to pretty much $1 upwards. Coming in at 62. I say 62. Looking just at the weekly chart here, let me expand this. Looks like 62 is a line of support right here. It was a line of resistance through many times and broke through support, resistance. Looks like 62, I think, to get in on. Email. I say get into Nordstrom's because, once again, holiday activities coming up, and normally all the retailers post pretty good numbers for there. So this stock has been beat up because of its earnings. I say just get into it. Going into my portfolio for the week, or for what happened through that week. I did get out of Fannie Mae, the preferreds. You can go back to my other videos to go and learn more about that, because I did post an entire video on just my outage of Fannie Mae, and I would like to add on to that I just read in my Barron's this week that we had that Einhorn and well, not Einhorn, what am I thinking of? Pershing Squares, Bill Ackman, and Fairview Capital are kind of butting heads, it sounds like, on this Fairhorn's restructuring deal. So there's going to be a lot of butting heads into this Fannie Mae thing, and it just gave me even more reason that I want to stay out of it. I mean, if it shoots up to $9 or something like that, I'm just not going to care, because it just feels like total risk and almost no return at this point in time. So yeah, I have a portfolio of $2,700 with a total account at $4,021, and with cash on the side, I have $1,300 on the side. That's why when I was saying, looking to go and put some money to work in, the Russell. That's what I was talking about. And I may go and put my AIG position up, because it is small compared to Starbucks and Michael Kors. And speaking of AIG, it had a really good week this week. Finally broke through that 49 level. It came into the 49 level here. I mean, it was above. That was going to break that 41.50 level. Didn't. As we see, it had a downturn, crossed that 200-day moving average, and the 50 and the 20-day down, up, and then we had that terrible day in the markets based on the Fed. So that went down, and then it boosted up with the entire markets thinking, yay, it's not that bad. And then we got to that dreaded 49 level, and we got above it, and we thought we were all going to go down. We thought we were going to get there, and then it went down, and then up. And then finally on Friday, broke through that 49 level and stayed above it and closed above it. Not only stayed above the 49 level, but broke the 49.50 level and stayed above it into the close. And it's just about to break $50. I'm waiting for a pullback to add more. It's been a great run so far. It's getting close to where I initially bought it at. I'm about at $1, just $1.20 in the hole right now for each share. That's negative $12. So yeah, great week of performance for AIG, especially if you got in on Thursday morning. Or Wednesday afternoon. That would have been great play. JPM finally got a deal settled. So all that's behind us. Had yet another great day, all-time highs. It's performing well. It's going to continue to perform well. It's got a lot of catching up to do to get back to the evaluations that Goldman Sachs has, Morgan Stanley has, Citi has. It's got a lot more upwards to do, and I think it will do that. I think we're going to see 60 here very shortly. Already talked about QQQ. Michael Kors had a pretty disappointing week. For me, started up in the $83 range and ended up at $80. Not a whole lot of news that came out, just kind of, I think it was pretty much profit taking. If you look back at the 2-week chart, nope, my apologies, at the 2-week chart, yeah, it's profit taking, because we had that huge, massive spike upwards. So there was just a lot of profit taking, because it posted really good numbers a couple weeks ago. It's been on an upward trend. Nothing that I'd worried about. I'd actually probably add a little bit more if you're light on this stock, just because it's above the 200-day, almost at that 50 for the 2-week chart. Going into the same reasons for Nordstrom's, going into the retail, going into the huge retail time of the year. That's why I'm saying also look at these consumer sentiment numbers and stuff like that, just to get a read on how good retail will be. But I still say stay in Michael Kors. They're still growing a lot. That's why they have such explosive earnings. I think they're just going to be a solid play straight into next year. Scott trade. And then Starbucks, as we see here, with those, as soon as they said that the economy is going to be not that bad, it bolted up to that $80 line, $81 line up there. Starbucks has been performing well. We had some slight downturn. Well, not slight. Over here we had, that was the announcement that they had to pay $2 billion to Kraft. We got up to a high, and then they all decided to sell a little bit because we were getting a little bit ahead of ourselves. Here we are almost getting close to all-time highs in Starbucks yet again. I will have that here in a second. Yep, we are just 0.39% off of our all-time high. The all-time high is 82.50. So if we go to a 10-minute and we go back 20 days, I think is when we hit that 82.50 line right there. Yep, $82 is going to be really going to be the key to go and get up there. I'd say that 81.70 line looks like it's going to be tough. Just looking at what we've got here, $81 line seems to be a huge level of support and was resistance, but it's now support as I look onto it, because we see a lot of battling along that 81 line, more battling at big battling here because it broke that resistance line. Came up and hit the other resistance line, beat it down. Then the next day, boom, broke through the support. Yeah, $81 line is definitely going to be crucial for Starbucks in the next couple of trading days. But overall, had a very strong week. Ended up upwards, so glad that happened. My view on this upcoming week is basically going to be keep watching out for all that consumer data. Watch stocks very closely because we're starting to get into a weird kind of area where the bubble talk is kind of over with. I know it sounds weird for me to say that, even though people are still calling bubbles. But a good point that I saw on Options Action, CNBC on Friday, was that we see a lot of downturns in the big Momo names. I say Momo like Tesla, huge downturns in Tesla, in Triple D, 3D printing systems, had a huge 6% down day. Yep, there we go. I mean, these momentum names are starting to go down a whole lot, so that's kind of taking some of the real frothy froth out of the market. So, they said this is kind of an interesting tell to see if the market's really calming down or not, as if these Momo names keep climbing up or not. So I'd say watch the Momo names. Tesla, Triple D, Pandora for a little bit has been a Momo name. Just watch those because they're going to be a huge tell into this. And I think I'm going to end it here. Thank you all for watching. Thank you for following me on Twitter, reading stuff on my blog. Make sure you go out and follow me on Twitter if you already aren't, to go follow all my other Leaders Investment Club members, because they all post really good stuff, really smart analysis. And please go sign up on leaders.com. Make an account. You get to go and see all the different content that we provide. You get to see our educational platform, so all the different posts that we do. It's overall just a great system. Austin and Julian did a great job on it, so I strongly recommend to go see that. And I will sign off till next time. See you guys.